Good morning, ladies and gentlemen, and welcome to the show this Thursday, the 7th of October, 2021. Thank you for tuning in. Glad to have you guys here. Now, there's a worldwide energy shortage going on right now, and coal. I didn't know they were still using coal as extensively as what they do in places like India, China. Uh, anyway, let's start the charts right here and take a look at what's going on. Take a look at some of these articles. As coal stocks shrink, India faces growing energy shortage crisis. So it's not just China. Here, this article says the United States worries about winter as prices of global natural gas shortages nears borders. What does a global transition to clean power mean? Energy crisis, gas shortages? Hedge funds flock to oil as energy shortage worsens. Europe's energy crisis is about to go global as gas prices soar. China's energy crisis highlights weaknesses in Xi's power plan. Energy crunch, 3 more United Kingdom power firms collapse. The energy crisis is sending oil, gas, and coal prices soaring. Could China's power crisis help or harm its green energy push? So we got energy problems out there. Let's take a look at this article right here. Okay. Now I'm going to tell you guys, even a millionaire nowadays, they're questioning whether a millionaire can retire. How long will your $1 million last in retirement? Well, if you guys been watching my show, you guys kind of understand that if you got $1 million in the bank and it's like in those digital units that they call the dollar now, that's nothing more than a digital unit. You know that inflation's going to eat your retirement away, and now they're starting to question. I mean, when I was growing up, that would be just ridiculous, absolutely ridiculous to even make such a statement. If you're a millionaire, of course you can retire and not worry about your retirement. But now, what's interesting about this, what makes me laugh, is the fact that they're questioning. They're questioning if you're a millionaire, if you can even retire. I mean, yeah. For younger people out there, it's hard to get their head around that. But if you're older, like I am, and knew what a millionaire was back in the time when a million was a million. Back in the time, when if a guy had $100 bill, $100 bill would go like probably the equivalent about like $3,000 or $4,000 would now. Just $100, I remember when you went into the store, and the prices on things were like back around the late 1960s, early 70s. The prices on things in the stores in the United States, you could fill up a whole shopping cart for less than $20. And I mean fill it. I mean, I'm talking about canned goods and everything. You could stock up and everything. You could fill your whole pantry, fill your whole house. Now it would cost you like that same $20 it would fill a shopping cart back then. Now it would probably be like 600 maybe. I don't know. They're destroying our dollar. And now this destruction has been slow up until the beginning of this year. The destruction of the dollar was slow. It was like a car going along the highway at 10 miles an hour, real slow, They've put their foot on the gas pedal at the start of this year, and now we're going 90 miles an hour down the freeway, and I'm going to tell you they're getting ready to hit the nitrous oxide afterburner. It's ridiculous. Anyway, let's take a look at the next article here. They keep wanting putting these things on. Senate nears a short-term deal on the debt ceiling. They've punted it. Okay, the debt ceiling's coming due. Janet Yellen told them that October 18th was the deadline date, and if we cross that, we were going to default on the U.S. debt and everything. What they've done is they've pushed it off until December. It says after a week-long standoff, GOP leader Mitch McConnell offered a 2-month fix to the debt ceiling, and Democrats have appeared to be ready to accept it. So they've basically pushed it off for 2 months. This doesn't mean that this is over. In fact, what's going to happen is when this comes due again next time, they're still at the same loggerheads. So early in December, this is going to come due again, and they're still at the same. They haven't solved anything. They haven't resolved anything. All they've done is just push it off for a couple more months, and that's what they're going to do. They're going to. It looks like they're going to pass it. It says Democrats appeared ready to accept. Looks like they're going to push the debt thing off for 2 more months. This is the big thing nowadays. The big thing that's in vogue, is when they run into problems, they just kick the can down the road a little bit further. So that's what they're going to do here. Let's take a look at our silver price today. Took a big swoop down earlier. Now it's taking a big swoop up, but not a real big swoop, 12 cents. We're looking at a price of $22.74. It is ultimately creeping up over the last few days. And of course, right now, I think markets have went bullish because the debt ceiling's been pushed off, and they're not worried about that anymore. Let's take a look at the gold price today, see what it's doing. $17.62 today. It's down $1.40 on the day so far. They're both gold and silver right now are trading in a very narrow trading range. Right now, both of them. They've consolidated into a very narrow trading range, the two of them. How long will that continue? I'm just not exactly sure. Let's take a look at crypto today. 2.313 billion, or in other words, 2313 billions. And that's $2.3 trillion industry. That's the whole industry, though. That's not just Bitcoin. Bitcoin makes up just slightly over $1 trillion. And we're looking at a Bitcoin price of 54,543 today. We've got indicators in the Bitcoin. When we look at the charts, the indicators seem rather bullish right now for Bitcoin. When I was taking a look at the charts, it looks we got kind of a little bit of a bullish pattern right now for Bitcoin. Well, let's take a look now at the, in other words, a bullish setup. Let's take a look now at the Dow Jones Industrial Average. What we're looking at is up 488 points on the day so far. I guess on the news that they're going to punt that debt ceiling off for 2 months, and it's taken some of the pressure off. So we're looking at 34,905. Now we're going to take a look at crude oil today. And we're down 80 cents on the day so far. Represents just over 1% at $76.63. Now we're going to take a look at the MOVE index for today, and we're looking at 60.65. Now you notice how the MOVE index has actually come down just a little bit. This news of them punting off the debt ceiling into a further date has helped the MOVE index to settle back down just a little bit. Now, let's take a look at bonds and rates. Now the bond yields are climbing today, and it's fairly substantial, looks like 2.8 basis points on the U.S. 10-year at 1.55, and the U.S. 30-year is at 2.1. We got to keep our eye on these bond yields. Now, my estimation is if the U.S. 10-year creeps too much over 2%, it's going to start to really adversely affect the markets. and it's at 1.55 right now. And it has climbed something. Let's take a little bit closer examination of the U.S. 10-year. And you see right here, it was down as low as 1.17 not long ago. So and it's in this trend of climbing right now. But if we take a look at the long-term trend, if we go into here and take a look at the long-term trend, you see it is a descending yield. And it's more than likely going to continue with this long-term trend. So I wouldn't expect it. If we take a look and we plot this out, I wouldn't expect it to go too much over 2% before it starts to descend back down again. Now, if we get some sort of a debt ceiling debacle, in December, we could see some massive drops in the market. In other words, this is going to come back again. They're only kicking it off for 2 months. This is going to come back again. It's going to come back again in a big way because nothing has been resolved. And so it's not over yet, guys. What I'm saying, the United States still could default on their debt obligations. But in December instead of this month. And if they do, if they can't get anything resolved and they do default on their obligations, these treasury yields on the long end of the yield curve could rise. No, not rise. I mean fall. It's counterintuitive. What I mean by is we could see the long end an uptick in the long end of the yield curve, and what we could actually see is we could see massive moves down in the market, in the stock market, at the same time. If they default. But the situation probably wouldn't last long because that would force them to resolve it. Because of the problem that it would generate within the system. It would create a panic situation. Okay, let's move on now and take a look at our U.S. dollar index today at 94.15. And we're going along sideways with the dollar today. What I really mean by that, guys, is if December comes and they don't resolve the debt ceiling, and if the United States did default on their obligations, we could see a tremendously quick drop in the stock market that would resemble something similar to what happened when the pandemic first broke out. You remember that big drop we had in the stock market? That forced them into that $2.2 trillion original stimulus plan? Well, the debt ceiling, if they didn't resolve it properly in December, it would do a similar sort of thing, And then we could see bond yields actually on the long end of the yield curve. It's very likely that the bond yields could actually fall or go down on the lower end of the yield curve. On the long end of the yield curve, I mean to say. Anyway, listen, guys, have a great rest of the afternoon. Remember to like and subscribe, and remember to comment in the comment section and give thumbs up. And we'll catch you guys tomorrow. Bye-bye.